Hey, Steve Saretsky here. Welcome back to the show. We had an update this week from the Bank of Canada. I want to walk you through the commentary there, give you my takeaways from the press conference. We also had some turmoil developing in the bond market, and I want to talk on the federal government's housing strategy. They've just released a 30-page PDF report based on how they plan to sort of fix Canada's housing issue. I actually had a conversation with Housing Minister Sean Fraser today after the announcement. Was able to kind of walk through the report. So I want to give you guys my insights, give you a little bit of feedback on my conversation with them as well, and just kind of walk you through how I'm looking at this and how I think really the impact of these policy measures could play out not only this year, but moving forward, even if you have a new government in place. So let's kind of walk through this. First and foremost, everyone's wondering, hey, when's the Bank of Canada? How many cuts? We're supposed to get like 6 or 7 cuts this year. What the hell is going on? So we had some insights as to when or how this is going to happen from the Bank of Canada this week. So let's clip to Tiff Macklem's comments right here.
Is the door open to a rate cut in June? Is that within the realm of possibilities for you?
Yes, it's within the realm of possibilities.
So the door is open. The door is open for rate cuts in June. People say, well, how is that going to be possible? The Fed can't cut. The Fed's not going to cut. If you went on to listen to the press conference, which I think it was a dovish press conference, I think that basically he's setting the markets up, he's positioning, he's starting to turn the cruise ship, they're trying to pull a U-turn here. I think you can see that he's framing up the market for cuts. And basically what he said, without officially saying it, but if you basically read between the lines, they effectively said, listen, we will sacrifice the Canadian dollar if we have to. Basically, the option they're going to have to pick is, hey, listen, if the Fed doesn't cut at all because their economic data is strong and inflation's still high, and the Bank of Canada starts cutting rates, the Canadian dollar is going to take a beating. And based on the lingo that Tiff Macklem gave, the indication is, listen, we will sacrifice the Canadian dollar for the over-levered Canadian consumer that drives the entire economy. That was the takeaway. So again, right or wrong, you can argue with it. I mean, you feel free to go back and watch the 45-minute press conference. That was my takeaway. Now, people say, well, again, how can they cut? How can they cut? Look at the U.S. The economic data is strong. The Fed's not cutting, and I think that's something we've been talking about on this channel for quite some time. Is listen, the economic data in the U.S. is way better, way stronger than Canada. There's not a whole lot of reason or rationale for the Fed to cut. We're seeing cuts being priced out of the market in the U.S. And so all you can do if you're Tiff Macklem of the Bank of Canada is you can control the short end of the curve, right? So you can cut rates. You can cut rates at the short end, which is going to drop variable rate mortgages. It's going to drop your 1-year and 2-year fixed rates. But what it's not going to do is it's not going to alter the path for these longer-term fixed rate mortgages in Canada, i.e. the 5-year fixed rate mortgage, which is the most common product in Canada. They can't influence that because that is being impacted by the bond market, and the bond market is pushing yields higher because the data in the U.S. Continues to be resilient. We had hotter than expected U.S. CPI inflation this week, and it continues to buck the trend that basically inflation peaked last summer. And it's been a struggle ever since to get it any lower. And so bond yields continue to back up. Like this year, right? Coming into this year, the whole talk was like lower rates, lower rates, lower rates. The Canada 5-year bond yield is up 50 basis points. It's up 50 basis points year to date. And so your fixed rate mortgages, again, as of right now, if you call your bank, call your lender, they're going higher. They're going higher. They're not going lower. So they bottomed, 6 to 8 weeks ago. And they've been pushing higher ever since. And so we have pretty much every mortgage rate today is above 5%. So again, Tiff Macklem will sort of do what he needs to do. They'll only be able to get in a few cuts if the Fed doesn't move. But nonetheless, like I said, I think the sacrificial lamb here moving forward is going to be the Canadian dollar. I know we talked about it at length on this week's Loonie Hour. So you can go and check that out. But the other thing I want to flip to is, okay, so what's the solution, right? So we're going to be in this period where, listen, yeah, the Bank of Canada might cut, they might get a few cuts in, but we're still going to be dealing with for the rest of this year at least, and probably moving forward, is we're going to be dealing with higher mortgage rates. We're going to be dealing with mortgage rates that are probably still going to be in the 5s, maybe in the high 4s. And so what is the path forward? How do we fix this affordability crisis? Well, what the federal government is doing and is trying to do, albeit at 8.5 years too late, is they're trying to basically ramp up housing supply. And they see the writing on the wall, which is what we've been talking about on this channel for almost 12 months now, really, is that you can try to rezone everything and you can do this and that, but at the end of the day, the economic cycle is what it is, which is when rates go from basically 0 to 5%, and they're the highest they've been in 2 decades, that makes a lot of these real estate development projects economically unfeasible. They're unviable in today's environment. And so the housing supply valve basically turns off. And so the feds, what they're trying to do is they're trying to sort of dangle all the carrots, and they're trying to change the economic picture. They're trying to change the viability of these projects. And so, well, how are they doing that? Okay, well, what they're doing is on the rental side is they're ramping up their CMHC lending program, which basically provides cheap loans to developers. So they've allocated another $15 billion towards that fund. So basically, if you're a developer, you can finance up to 95% of your project, use it with below market rates, and then you can get 50-year amortizations on new construction, right? So with a 50-year amortization, it starts to make some of these projects cash flow even at today's higher rates. So that's number one. That's what they've done. Number two is they removed GST on rental construction. Again, you just saved a developer basically 5% GST. So you just saved a developer 5% in cost savings right off the bat. That's number two. Number three, they just announced in their report today an increase to the capital cost allowance in your first few years of operating a building. Basically allows you to write off more of your building that depreciates. You're allowed to basically write more of that off up front. So again, sort of it basically what it does is it helps to run and operate these buildings immediately out the gates, improves ROIs for investors. So they're trying to change the math. They're trying to basically counteract the economic cycle that is rolling over, right? The natural progression is when rates go up as much as they do, is that development, it rolls over. Basically, the supply gets shut off, and they're trying to basically counteract that with all these tax policy measures to make projects more or a little bit slightly more profitable. Now, again, is it going to work? And so one of the other things they're trying to do, right, is they're dangling the carrot to provincial and municipal governments and saying, listen, we want you to remove single family zoning, and we want you to make it all fourplex. We want fourplexes by right away. So any single family lot, whether that's in Ottawa or Toronto or in Vancouver or in Calgary, we want you to say, listen, single family houses, you can still build them, but we want you to allow fourplexes on every single family lot. And so what they're basically doing to the provinces is they're saying, we will give you, Vancouver, BC, will give you $1 billion if you make fourplexes a right of way. And so what's happening is you're seeing some governments such as Alberta, you're seeing Doug Ford in Ontario saying, we don't like this. We think you're overstepping your jurisdiction. My province, my government doesn't want to mandate an entire province with this. And so what the feds are doing is they're overstepping the provincial governments, and they're now going to the municipal governments and saying, okay, listen, Scarborough, Ontario, listen, Grand Prairie, Alberta, if you want to make fourplex zoning a right of way in your municipality, we will cut you a check. We'll just cut you a check. You change your zoning bylaws to do as we say, and we will cut you the check, thus bypassing the provincial government. So this is basically what's happening now. I think, to be honest, I think a lot of this is good policy. I think, and I said this to Sean on the phone, I said, listen, you guys are finally on the right track. The only thing is this has been talked about for 6, 7, 8 years, and you waited too long. So I really can't give you credit because you dropped the ball for so long. You created the problem, you exacerbated the problem, and now you're coming up with a solution because the polls looked horrible. And again, it's too late. And so I think what's going to happen here is, even when you rezone and you make it all fourplexes, a lot of these projects are still not economically viable. And a lot of the times people don't want to take risks in this market today because the economic environment, it is uncertain. Are we going to recession? Are we not? Rates are still really high. Can people afford them when the project's completed? You pencil the numbers, the margins are still really, really tight. And so a lot of this stuff isn't actually going to get built in the very near future. This is setting us up, though, however, on the path, this is setting us up for the next 5-10 years for more housing supply, for less red tape, to get projects approved quicker, faster. This is going to make a difference, a real difference, in my opinion. But it's going to take a decade to play out and see the actual result of these policies. A couple other things as we walk through it. Is there other things that are in these policy measures that are, in my opinion, all largely bogus? So, for example, I'll give you one that we had here from, Mr. Guilbeault. What they're talking about is, listen, our goal is to build 3.9 million homes by 2031. I think this is good policy. We have to understand, 3.9 million homes by 2031. Just for context, if anyone's actually sitting there at home and wondering, is this actually going to be feasible? In order to hit that target, we'd have to build three times the record number of home completions in a single calendar year in this country. And you then have to do it for 6 consecutive years with interest rates at the highest levels in 2 decades. So these targets are complete bogus. We don't even have enough skilled trades to actually hit them. But nonetheless, I think what we are doing through a lot of these policy measures is getting rid of the bureaucracy and the red tape. Some of these ideas are not going to be, in my opinion, come to fruition. One of the ones I was talking to the minister about was, this housing catalog. The housing catalog they keep talking about, which is basically a standardized blueprint that you can sort of apply to, whatever city or municipality you want. And it would basically be an auto approval, right? You wouldn't have to go through all the bureaucracy at the municipal city hall to get your housing development approved. You can just use one of the catalogs that has sort of been pre-vetted and pre-approved from the federal government and the municipalities, and just rubber stamped, and you're good to go. This isn't the 1930s anymore. Okay, so every city, deals with different character, different neighborhoods, how they want the roof to be sloped. What you build, for example, in Alberta is not what you build in BC. They're different climates, okay? So they have different, every province has a different building code. What is the slope and the grade of the lot, right? I mean, there's certain things that you have to do based on the soil in that location, based on the slope in that location. You can't have a standardized blueprint, in my opinion. We'll wait and see if they can somehow find a genius way to figure this out. But I think there's a reason why we have architects. There's a reason why the architect business is booming, and the need for them is continues to grow. It's because you have to. It's hard to design projects. It takes time. You actually legally need architects to sign off. You need architects to sign off on projects with 5 units or greater, for example. So again, my overall grade of the Liberal government's federal housing plan is actually a thumbs up. I think it's I'll give it a B+. I think they've actually done a pretty good job. There's a lot of policy measures in here that could genuinely move the needle. They are going to need some provincial governments and municipal governments to come in and play ball a bit, but I think they've dangled the carrot, which is money, to make it overly lucrative for a lot of them to actually sign on. Of course, you guys know I'm here in BC. The BC government has really been spearheading this. In fact, I think the whole idea of this fourplex across all the provinces came from BC. They basically just copied what the BC government did and said, hey, that's a good idea. We should force all these provinces to do the same. And so the BC government is basically leading the charge on this with very aggressive policy around zoning. But again, like I said, in today's environment, you can rezone as much land as you want. It doesn't necessarily mean projects are going to get built, or not, at least not at the scale that governments want them and need them to be. So as always, we'll wait and see how this shapes up. Probably some more goodies coming out, but we'll get some more details as the actual budget is released. But this is a good 28-page PDF there for people to dig through. As always, hope that helped. See you next week.